Vice President Kamala Harris closing out the Democratic National Convention last night with a rousing speech. She laid out her economic vision for the next 4 years. Let's take a listen.
That's why we will create what I call an opportunity economy where everyone has the chance to compete and a chance to succeed. And as president, I will bring together labor and workers and small business owners and entrepreneurs and American companies to create jobs, to grow our economy, and to lower the cost of everyday needs like health care and housing and groceries.
For more reaction to the convention and where the election stands with less than 75 days to go, we are joined in studio by Tom McLaughlin, UBS Global Wealth Management's Election Watch co-lead. And Tom, it's great to have you. Thanks for coming on set with us.
Being here.
Let's talk about your election probabilities. They've changed quite a bit, which we will talk about. But talk to me about your most likely outcome right now and what your models are telling you.
The most likely outcome today, and it's today, not 7 weeks ago, is Harris actually winning. But it's by a very, very small margin. This is going to be an exceptionally close election. So when we talk about probabilities, we're very careful to suggest and tell our clients this is going to be a nail biter right to the end, right to election day. So Harris by a small margin is probably more likely. In terms of the Congress, which is equally important, how Congress comes out of November is going to basically dictate domestic policy. And what can be implemented and what simply can't be implemented. And in that case, we think that a divided Congress is just as likely as a unified Congress.
So then what does that mean just in terms of implications for policy, implications for markets more specifically, and the economy, if we do have that outcome?
Right. A lot will basically depend on what your principal concern is. If, for example, your principal concern is the size of the federal deficit, then you probably want to see a divided Congress. Because a unified Congress under either Republican or Democratic control, along with a Democratic or Republican president, is more likely to basically increase the size of the deficit quickly.
Are you telling clients that I guess in your conversations with clients, I'm
Sure.
sure they're asking you, what is the best outcome for me? What does this mean for my portfolio? Is there a straight answer to that?
The way you've asked it, probably not. But what we do say is, listen, there's a lot of evidence to suggest that presidential elections do have an impact on the market in a tactical basis, in a short-term basis, over the course of 2 or 3 months. Over a 2 or 3 year period, it tends to wash out. More, and this is equally important, if you're in a position where, here's the evidence, in 2008, those who were disappointed with the election in 2008 pulled out of the market. They went risk off, they reduced their equity holdings and missed the rally that happened beginning in March of 2009. Same thing happened 8 years later. Those who were disappointed with the election results in 2016, right? They also went risk off and they missed the rally in 2017. So what we're suggesting is it's really important not to get too wound up about the outcome of the election. It's hard to do given the media input and all the attention that we're basically focusing on the election. But for private clients, not tactical private equity, hedge fund, et cetera. But for private clients, construct your portfolio, stick with it, and don't get too wrapped up in the election.
What changes that advice? Because if you look at, I know you look at all of this, right?
Yeah.
But if you look at the stock market, it goes up regardless of whether you got a Republican or a Democrat in office. So what changes the advice to hold steady?
Okay, to that point, this is the other thing. I get a lot of questions from people say, who's better for the economy or who's better for the markets? A Republican president or Democratic president. It all depends on your time series. Do you start in 1928 or 32? 48 or 1960? Do you include or exclude 2008? Right? You can make the numbers do whatever you want.
Yeah.
So that's what's problematic and why we also emphasize, listen, don't get too caught up in the party affiliation. There are policy implications, there's no question. When you think about the two parties, look at what the Republican platform is today, right? It's immigration skepticism, it's border protectionism, it's economic populism, lower taxes, lenient regulation, and I would call it transactional isolationism. That is being wary of foreign entanglements. The Democrats, actually there's a choice here for voters. The Democrats are saying multilateral engagement. We want to basically work with traditional allies. Targeted taxation, we're going to basically have the tax code target for the benefit of those who are not doing quite as well as others. There is a social progressivism app to this, which is reproductive rights, child tax care credits, family leave. So I sometimes get the question from individuals saying, do I really have a choice? There is a choice here. which is positive from the perspective of everyone should vote.
What is the lead up to this election? Obviously, with Biden stepping aside, you have Kamala coming in late. How is it evaluating these policy perspectives in that this year? How has that differed from the work you have done in the past? I guess, does that further complicate or add maybe a little bit more uncertainty given the fact that we haven't necessarily gotten much clarity? And I think you can make that argument for either candidate.
Yeah, it would have been more challenging if Biden hadn't endorsed as vice president and Harris wasn't anointed by the party as his successor. Because to some degree, she is going to be somewhat constrained as to how much distance she can make between herself and Biden. Right. She'll create some, by the way. That's what new presidential candidates always do. But it's going to be more difficult to just basically move abruptly away from the policies. So what you're seeing, and what we saw in 4 days of the convention, is a lot of slapping each other on the back because of whatever successes they can basically suggest Biden accomplished. Very natural. In the case of Trump and J.D. Vance, they're suggesting that a lot of these successes were ephemeral and that we should go back to what they were doing 4 years earlier. But this is fairly typical. The one important takeaway I would suggest is that presidential elections are decided on the economy. And how pollsters ask the question make a difference. Sure. So in the middle of COVID, or at least shortly after COVID began in 2020, individuals were asked, what's the most important thing on your mind? And not surprisingly, people said COVID-19, right? When they asked what's the most important factor in your choice of president, they basically said the economy. Same time, two different questions asked slightly differently, and it gives you the impression that the economy is still going to dictate the results.
It's fascinating. Well, Tom, hopefully we can have you back before the election here over the next couple of months. Tom McLaughlin, we really appreciate you taking the time here. UBS Global Wealth Management's Election Watch co-lead.